Hey everyone, and welcome back to Money Journey. Today I'm excited to share with you my top 5 stock picks for 2025. These aren't just any stocks, they are companies that I believe are poised for significant growth and long term success. I've carefully selected stocks based on three key criteria: quality of their business. These are companies with strong business model, competitive advantage, and proven track records of innovation. Their fundamentals: they have solid financial performance, strong balance sheets, and sustainable growth prospects. And at least valuation. Despite their quality, these stocks are currently trading at attractive valuation, offering a margin of safety for investors. So let's dive into my top 5 picks for 2025. Remember, this isn't financial advice, so always do your own research before making any investment decisions. My first pick is one of my favorite tech stocks: Google. There is no need for presentations. Everyone knows Google, their business. A lot of people in the world use their product. In terms of fundamentals, they are trading at a forward P of just 21, which is below the market average right now for the S&P 500. Do you believe Google is a lower quality business than the 500 companies in the S&P 500? I don't believe so. They have great margins. When you look to their fundamentals, if you look to the revenue or past revenues, it's a beautiful of a graph, always going up, really great returns on investment. When you look at our money journey checklist, it's all check marks. We have revenue growth, we have really great margins. They basically have no debt and they could pay all of their long-term debt with their cash in hand. They have high returns on equity and on investment, above 25%, which is incredible. They have one moat, a lot of competitive advantage. They have been free cash flow positive in the last few years, and they are a business that are very profitable. Their returns are really great, and they are returning capital to the shareholders. They have a small dividend that started this year, but they are doing plenty of buybacks. In terms of valuation, for a company like Google, it's very difficult to find Google at the undervalued state, but we have had that opportunity in the last few years, which was incredible. Right now, Google is trading close to fair value, but when you compare to the other Mag 7 companies with the quality of Google, it's the cheapest Mag 7 in the market. One thing I like to do at year's ending is look for the worst performing stocks in the S&P 500 and look at stocks at 52-week lows. When there are extreme pessimism in stocks, it's when it's probably a very good opportunity to find undervalued stocks. This time I will look into the US market and look at past performance of different groups in order to find sectors that are underperforming the market. During the past 3 months and year to date, healthcare, materials, and real estate are sectors that are not performing very well, especially when compared to the S&P 500 performance overall. I don't invest in materials because of cyclicality, historical low returns, and because it's not in my circle of companies. In 2025, healthcare and real estate might be good sectors to pay attention in 2025. So my second pick, I will start with REITs. I have to admit that it's not in my circle of companies, and it's not my favorite sector, but historically, real estate has been one of the best sectors. I don't know very good companies in real estate, but if I have to own one REIT for the long term, it has to be Vichy. Vichy Properties is a real estate investment trust REIT specializing in experiential real estate. It owns a diverse portfolio of high-quality gaming, hospitality, and entertainment assets, including iconic properties like Caesars Palace, Las Vegas, MGM Grand, and the Venetian Resort in Las Vegas. Vichy's business model involves acquiring these properties and leasing them back to the top-tier operators under long-term triple net lease agreements. This structure provides Vichy with a stable and predictable income stream while allowing the operators to focus on managing the properties and driving revenue. My third pick will be a healthcare stock. Looking to healthcare, I have to admit, at this moment there are very high quality businesses selling at a fair price and even below. It was very difficult to choose only one company, but my pick is Novo Nordisk. Novo Nordisk is an incredible company. They focus on diabetes and medication for that. Right now they own the GLP-1, the Ozempic that is making high in the market because of they find out that it helps lose weight, and right now everyone is looking into that, and that's why Novo Nordisk is that as this competitive advantage. But besides that, I do really believe that diabetes will increase in the next few years. Nutrition has been very bad for populations around the world, and diabetes is a disease that is increasing over the time, and it is expected to grow at a 10% rate. So Novo Nordisk will benefit from that increase. So when I look to their products, Ozempic, GLP-1, they are protected by patents until 2030 and 2031. So they will have competitive advantage in the next few years. Looking at the fundamentals, it is a company that is not trading cheap right now, even though they are in a slump. They are trading at a forward P of 25, which is incredible high. But looking at the quality of this company, I don't really believe it's very high. Their fundamentals are incredible. Margins are awesome. So basically, it is a very high quality company based in Denmark. So when we look to our manager in the checklist, it's all check marks with an overall fundamental score of 96 out of 100. Revenue growth has been growing at a really good pace, around 15% per year. Their margins are increasing. They have gross margin of 84%, net margins of 35%. They basically have their debt controlled. They have almost more cash than their long-term debt, and they could pay their long-term debt very easily, which is not very common on pharmaceutical companies, for example. Their returns are incredible. I will not talk about that. 80% returns on equity, above 50% returns on invested capital. They have a moat. Their competitive advantages like intangible assets, these patents that they have are protecting their products. They have in free cash flow positive, and they are returning capital to the shareholders. They are paying a small dividend, and they are even buying back some shares. When you look to the graph of their revenues and free cash flow over the years, it's incredible, a steady growth at a really great pace. When you look to shares outstanding, decreasing, margins going up, gross margins, and the returns, even though they are not going up in the tendency, this is a returns above 50%. So this is incredible. I will not talk about that. So basically, Novo Nordisk is an incredible company, very high quality, and right now it's trading at my fair value. Even though they are growing at 20-30% per year, in my assumption, I'm only expecting Novo Nordisk to grow around 10%, 8%, and even with that assumption, we came with a fair value close to the price right now. So it might be a really good opportunity right now. Dollar is very strong at the moment, and we are seeing foreign company stock prices going down because of FX effect. It makes a lot of sense to invest in other markets if you believe that the dollar is getting weaker in the future. I really believe that emerging markets, especially China, is trading at a great value, so it makes sense to include one Chinese stock as a pick for 2025. So my favorite Chinese stocks right now is Alibaba. Baba stock is in a slump. Right now it's trading at one of the cheapest valuation in history, trading at the forward P under 9. But I really believe Alibaba it's the most safe asset on China. They are a very diversified business since e-commerce, logistics, cloud business, AI. They have a lot of very high quality business in their portfolio. Looking at the company, it's a great fundamental company, but we'll not talk in depth about Alibaba because we have done a lot of videos talking about Alibaba. So Alibaba will be one of my picks for 2025. Another emerging market that is trading very cheap right now is Brazil. So my fifth and last pick is StoneCo. StoneCo is a financial software company that works and provides software and financial service in Brazil. In my opinion, it's one of the most high quality business in Brazil. They have been growing a lot. They own great assets and they have plenty of good margins. So overall, StoneCo is a real great business, but it's inside a very cyclical, not very stable market that is Brazil. Right now, the real is in a slump when compared to the dollar. There are plenty of doubts about the president, the Brazil economy. So there are plenty of doubts about this stock. So right now it's trading at a very low price, especially for the quality of their business. Their fundamentals are incredible. I really love their business model and their assets. But right now it's trading at a big discount. Even though I've assumed a very high margin of safety. Look at the discount rate I've used for my base case, 16%, which is very high. And even with this high discount rate, we came with a fair value around $13, $14. And right now the stock is trading at $8. So it is a very big discount because of there are a lot of pessimism in Brazil economy, Brazilian stocks, and StoneCo is suffering from that. So, but overall, it is if you believe that StoneCo will continue to be a really great company, and if you believe that there are this pessimism in Brazil is overrated, this might be a very good opportunity, and that's why StoneCo is one of my picks for 2025. So there you have it, my top 5 picks for 2025. I believe these companies have the potential to deliver strong returns over the long term. As always, it's important to remember that investing involves risk. Past performance is not indicative of future results. It's crucial to conduct thorough research and consider your own risk tolerance before making any investment decision. I hope this video has been helpful. If you have any questions or comments, please leave them below. Don't forget to like, share and subscribe for more investment insights. Thanks for watching.